All right, let's get more context on the disappointing jobs report for August. I want to send this over to Yahoo Finance Jen Schonberger in D.C. for a chat with the U.S. Labor Secretary. Jen.
Thanks so much, Brian. I'm joined now by Labor Secretary Lori Chavez-DeRemer. So great to see you. Thank you so much for joining me.
Of course, glad to be here. It's a beautiful day in D.C.
It is a beautiful day here at the White House. Weaker jobs report, though, across the board. We saw job growth in June turn negative, so we've seen now 3 months of slower growth. What's going on here?
Well, we're still in the positive, almost 500,000 new jobs that the president has created. He's done his job. The president is doing a wonderful job with the trade talks, with the tariff talks. Tariffs are working. Congress did their job by passing the working families tax cuts. You know who has not done their job? The Fed. Jerome Powell needs to do his job and cut those interest rates now. What is he waiting for? You know, 2016, the president was correct. 2020, the president's correct, and he's correct today. It's time for all of who can assist the American people in getting this economy growing, and he's not doing his job.
The Fed does have a meeting on September 17th. Are you looking for 50 basis point rate cut here, sort of a catch-up rate cut as opposed to 25 basis points?
Well, while I'm not the economist, I can tell you this. If he doesn't cut those rates, the American people will continue to suffer. You know, the companies are investing trillions of dollars into the economy and into their workforce and into their businesses. The American people, I mean, think about this. Wages have gone up, unemployment has held steady. We're seeing, again, the investments in the American worker. Everything that the Department of Labor is doing is to invest in reskilling and upskilling, and we need that help because why? Because cheaper dollars for the American business to invest in their workforce is not happening. And why he's waiting is, it boggles my mind why, you know, he knows the data, he knows how important this is, and if it's a political move, it's nonsense. He needs to go ahead and move forward and cut those rates.
You mentioned tariffs. We know that the Fed has been watching the impact of tariffs on hiring, and we've heard anecdotally some employers who have been in a holding pattern. Do you think that that has had an impact on, over the past 3 months, what we've seen in the job market data? Could we see a rebound? And adding on to that, last night we heard from President Trump, who said we should really be paying attention to job growth into 2026 because of the groundwork that has been laid by his policies, that we could really see a boom next year.
Yeah, policies take time. I mean, that's the beauty of it. We knew that what the Biden administration had created. We understood that he was, you know, these numbers for the federal government, 100,000 jobs have been cut from the federal government jobs, but private sector jobs have gone up. That takes time and that takes policy work. It's taken the president to understand that, you know, tariff talks, leveling the playing field for the American worker and American business mattered, and he's been solid and masterful at doing that. Look at the dollars that have been received with tariffs. That's important to the American economy and the trade deficit. So he's doing his part. And again, look at Congress, how long it has taken them to decide that, you know, the Working Families Tax Cut Act is so important to the American people, and they finally got it done. It's going to be the biggest piece of legislation that they could have done, and that's going to finally kick in and help the American people. And again, that last leg of the stool, interest rates. Cut those interest rates so that there's a solid foundation for these businesses to grow, and then we'll see these numbers continue to tick up. I mean, still, 500,000 new jobs is great for this country. You know, statistically, the job market really didn't change, but we want it to grow and we want more investment. So I can tell you this, the president's doing his job, the Department of Labor is doing their job, making sure that the workforce is ready to go, and we're going to keep looking at the Fed to do their job.
Do you think we're looking at a lower, what economists call break-even rate, because we're seeing lower immigration in this country? In other words, we don't need to create as many jobs to keep up with population growth as a result?
Well, what we've seen is native-born workers. I mean, think about all the net positive jobs have been to native-born workers here. That's the America First policies that the president wanted. Of course, as we've secured the border and people have returned to their home countries, we have less people. But we now want, you know, American workers to be at the foremost, and the primary pinnacle of everything I do at the Department of Labor is through the lens of the American workforce.
Last jobs report, the president fired BLS Commissioner Erica McIntyre. He alleged that the jobs numbers had been manipulated or rigged. Are this morning's jobs numbers trustworthy?
Well, we don't have somebody in that position yet. They have to still be confirmed and go through the process. But here's what the American people want. They want transparency, they want accurate data, and that is not what was happening over time. I can tell you the Biden administration, who knows what they did with inflating those numbers, but right now, the American people is where the president is leaning in. He wants to see the accurate data reports. That's what's important. You know, markets move because of these numbers. Everybody makes a move based on the numbers that come out. If they're not accurate, then what are we doing for the American people? We're not helping them, and that's the transparency that the president promised that he would deliver to them.
To your point, we have continued to see very large revisions, not just under this administration, but previous administrations. This has been ongoing for some time, and there have been question marks around data collection from the Bureau of Labor Statistics for some time. We know that the survey that you guys conduct, you give firms 3 months to answer. So what can be done, for instance, to get a faster response so that firms are responding in month 1 as opposed to month 3, so we're not seeing so much volatility in the data? What other changes could be done along those lines?
Well, when the new commissioner is confirmed, you know, that's the key, the modernization of the systems themselves. For so long, I mean, a lot of these surveys are done on the phone. People are not answering. Look at the summer. Kids are back in school. There's a lot of various reasons why those numbers can move along. But we want the most accurate data points, and I think that that's what they're going to offer. So that's what the American people want. It's 2025. You mean to tell me we can't get accurate data, real-time data oftentimes? We shouldn't have to wait 3 months and then do these revisions that seem that they change the markets. And that's why, you know, possibly with the Fed not lowering interest rates before because they believe in a jobs report that the Biden administration had put out, we need to make sure we have accurate data for the American people.
And really quick before I let you go, I know you're short on time. The president signed an executive order a couple weeks ago that lays the groundwork for inclusion of alternative assets like crypto, private equity into 401ks. That order has been now directed to you for review for fiduciary guidance. How soon could we see guidance on that so that people can invest and have those options?
Right. Well, we already rolled back the Biden era rule for this reason. You know, we do not believe that the Department of Labor should put their thumb on the scale. This is between the fiduciary and the investor. And that's what the president's asking for is, again, more flexibility and them working together and determining that. So as we move through the regulatory agenda, which was released yesterday, we'll move down that path. But that's what the president is wanting. He wants the flexibility so that everyday Americans have the opportunity to invest where they want to invest and that it's level across the playing field. So we're going to continue to move through that regulatory agenda. You know, have the input by the professionals. But again, those type of decisions should be made between the fiduciary and their investor.
Madam Secretary, thank you so much as always for your insight. So appreciate it.
Thank you so much. Great to be here.
We'll see you next month.
All right. Take care.